gentlemen, distinguished speakers, esteemed attendees, the organizers of FinanceMalta's annual conference. It's an absolute pleasure to be here at this very intellectually stimulating conference. And it's also a personal honor to be participating in the third year in a row. I've keynoted in the past 2 years, but this year I'm actually even happier to get to moderate such session because I get to ask the questions instead of being asked the questions. And it's really great to see the progress that has happened actually in the past 3 years. Like 3 years ago, we were speaking about disruption. Disruption actually did happen. We were speaking about ever-changing business models in the financial industry due to the increase in Fintech and Fintech propositions. We discussed PSD2 and the impacts of that. We discussed the fact that even though people need banking, they might not necessarily need banks because the pillars of a bank being deposits, transfers and loans as services, they're actually being already provided by fintech companies that are agile, that are nimble, that are fast, that are providing the essence of what banking is all about. We discussed millennials and them adopting products that are much more appealing to them. And given the fact that people are not getting any younger and millennials are actually growing older in age, they are actually now consumers of these products. Some of fintech companies that 3 years ago were just startups are actually now unicorns. They're valued at more than $1 billion. We discussed the fact that trust has eroded massively in the financial industry post the financial crisis in 2008. Now we are discussing trustless mechanisms and trustless systems because of blockchain. So much has happened, and we are really proud to be here in Malta because we are in the middle of all of this. We have something to be really proud of because we're the first country in the world that has decided to regulate technology arrangements and structures, starting from DLT, distributed ledger technology, with the vision to actually move into artificial intelligence, IoT, and other areas and mechanisms. 2 years ago, I ended my keynote speech by saying, no one can predict the future, but we should have strategic foresight to understand future trends, and we should set up an infrastructure that will accommodate future growth. And I'm really happy to see that the regulatory framework that is being proposed in Malta is actually fulfilling that purpose. Today, we have a fantastic, very multidisciplinary panel here, FinTech panel. We have Dr. Gauci, we have Ms. Claudine Cassar, Ms. Sophia Bantanidis, and Ms. Tugce Ergul. I will let them start off by introducing themselves to all of you, and then we'll kickstart some fireside chat, basically, and ask you about your opinions. But please, we'll start with Dr. Gauci.
I keep it short and simple. I'm a technology lawyer. I do fintech as well. I have a particular inclination more towards technology rather than law. And I love as well the policy intersection between the two. So that's predominantly me.
Good morning, everyone. I'm Claudine Cassar. I'm the leader of Deloitte Digital. My particular area of interest is how digital is helping transform people's lives. And that is something I hope we'll be able to talk about today.
Hi, good morning. I'm Sophia Bantanidis. I work for Citibank. I work for a department called Treasury and Trade Solutions, TTS for short. I should probably explain what that means. It's Citi's transaction bank. So we offer working capital and transaction services for some of the world's largest corporates, financial institutions, and public sector clients. We operate the largest proprietary payments network of any financial institution. Within that, I have a strategy role. I look after regulatory and market strategy, so that means keeping abreast of changes, market mandated changes, regulatory changes, and changes in innovation to influence policymakers and regulators where I used to work, so that we can still innovate for our clients. I'm very involved in Citibank's Accelerator, which we launched in Tel Aviv. I'm a judge on the Accelerator, scouting fintech firms, and I'm also a mentor. I work closely with our innovation labs and our venture capital business to make sure that we can fintegrate and integrate fintech in Citi.
Good morning, everyone. My name is Tugce Ergul. I'm one of the founding partners of an organization called AngelLabs, based in San Francisco, and recently we launched an office in Paris to cover Europe. I've been investing in fintech companies, or we've been investing in fintech companies in the last 5 years, also into fintech funds throughout the world. Today on the panel, I think I'll be wearing my investor hat, talking about fintech technology and blockchain. As of recently, we've been investing a lot in blockchain companies. And yeah, this is it.
Brilliant, fantastic. So I'm going to start actually with you, Claudine, wearing the digital innovation hat. We are currently speaking a lot about regulating a space which has not been previously regulated anywhere else in the world, which is technology arrangements and structure. And a lot of technologies themselves are actually abstract concepts, and technologists usually don't like the word regulation because they think that it stifles innovation. From your standpoint and spearheading digital operation, how do you think we should merge regulation and innovation without stifling the latter?
As a citizen, so I'm going to look at it from two different perspectives. So from a technology perspective, obviously, the allowing innovators the space to go out there and dream new things, things that regulators haven't even thought about, is fantastic. But then there is the aspect of the citizen, and obviously the citizen has to be protected. So in an ideal world, and what is actually happening in industry in several countries, is the emergence of regulatory sandboxes, which give the space to the innovators to be able to explore and basically look at their idea and implement their idea in a controlled environment, while giving the regulators the time to assess the technology and make sure that the regulatory framework is robust enough to be able to control the impact of the technology. I believe that there is a lot that needs to be done when it comes to educating users of fintech technologies. It's an area that we rarely talk about, but I think it's important. In your opening speech, you spoke about the lack of trust, the breakdown of trust in the financial services sector because of what happened in the crash. I think that there is a potential for that to happen again, because when you do start talking about things like peer-to-peer lending and crowdfunding, some people might not quite understand what they're getting into. So once you manage to get this happy symbiosis where you have the regulators and the innovators working hand in hand in a controlled environment while also educating the consumer, I think we've got the best of both worlds, and we can make sure that we're truly unleashing the power of technology while protecting citizens.
Can I add something there? Because you touched on the education component. I think one of the most important aspects is to also educate the regulators. That's one of the biggest problems we see in the US with SEC. When the first ICOs came out, the biggest problem we had was, well, SEC didn't know what to do because the regulators didn't understand the space. So they kind of stayed back, watched and learned. And initially, I don't think they were necessarily making the right moves either, but I think it's very important for the regulators to be educated as well, to be able to...
Actually, this is very interesting. What takes us to a side of the question that I think should be directed at Dr. Ian here. You obviously have been one of the driving forces locally here, overseeing the drafting of the regulation. As a technology lawyer, you do understand both sides of the spectrum. You do appreciate the innovation process, but at the same time you do always emphasize the need of regulation, especially in a space which has not been defined properly yet. And you and I work quite closely together on many fronts, and we always discuss the fact of centralization versus decentralization, FAT and TIN protocol, without going very technical into that, because you and I can have that over coffee later. What's your perspective when it comes to regulation innovation within the decentralized structure?
Well, that's quite interesting as a question, but I would start before tackling decentralization and disintermediation, because it can take me aeons to discuss that, with the basic components of why you need a law. I will not speak about regulation, it's law, it's a Grundnorm. You need a law because through law you have stability. Through stability you have prosperity. When you have prosperity, you have the citizen which is happy, you have an uptake on technology, so you have innovation. As a matter of fact, innovation is nowhere to be defined. Innovation is something which we feel, which the people investing in it see the potential. So even as legislators, we need to make sure that any law is crafted with this in mind. Now, usually a law, and I will not take long on this, has three basic elements. You have positive elements, so you're creating an institutional framework. It has negative elements, direct negative elements, and usually you find these where something is wrong, so you have social regulation, you have economic regulation, like competition law, social regulation would be consumer legislation, employment law, health legislation, and you have as well administrative law, okay, administrative regulation, which usually will touch on both positive and negatives. But the negative side, when something is wrong, is forbidden, we usually make sure that that is forbidden a priori. So that is an ex-ante measure. Then to a certain extent, you have as well part of it which is indirect. If you look, for example, what happened in UK back when they had the Industrial Revolution, the Luddites, you need to expect that certain facets of society might be impinged because of innovation, because of technology. So even from that front, we need to make sure when crafting the law, because you're crafting a law which is forward-looking, that when you're creating the principles, it's more principles rather than regulation, you cater for that as well. The third pillar is obviously financial. I mean, government, Caesar needs to take its cut. Now, this is very important, because here the elements of proportionality is very important, and the element as well, no law should have regulatory capture. So it's very important that whatever you do, it's true that we're speaking about different facets of services, so it could be that they are not financial services in certain instances, it is technology, we need to treat technology in a particular manner, but nonetheless, we should never create regulatory capture. So if you see all this stuff, I would not want to be a regulator who has to decide in between all this intersection. But it is precisely what we tried to do in Malta. As a matter of fact, and I don't want to be too critical, even the concept, and I am a technology lawyer, I'm a telcos lawyer actually, so technology neutrality is something which is at the heart of all my ether. But even technology neutrality, to a certain extent, it's one thing applying technology neutrality when you're speaking about services. So you're regulating the services. So then you can say, listen, it's technology neutral. But when you have a technology and you start giving the technology as a service, and the technology has particular traits which require intervention, there I could question as well technology neutrality. And I will stop with one clear case. GDPR, which is meant to be technology neutral, but it applies in a silo environment, it applies to providers, applicable to public blockchain, which has no silos and is totally decentralized. The two will not marry, even though GDPR, to a certain extent, at face value, is meant to be technology neutral.
Brilliant, thank you, Ian. I actually take to Sophia now. Sophia, can you hear me now?
Yeah,
Better?
right.
Sophia, you wear a number of hats, as you said in your introduction, within Citi, where you work. What's Citi's main approach towards innovation in the fintech space? And is there any attempt to actually try to influence policies around that in a positive manner in order for you to make sure that there's an ecosystem that's fostering innovation within Citigroup itself?
Okay, so I think that's mainly two questions there, our approach to influencing and our approach to innovation. So yes, of course we are influencing policymakers and regulators heavily when they touch the topic of innovation, when they touch the topic of blockchain and DLT. We do that by submitting our responses directly in our own name because we want to make certain noises, right? So we do it one way. And we also do it via trade bodies. Here, what we really distinguish between is regulation or any future regulation that's based on an entity versus regulation that's based on an activity or on a service. And of course, we promote the latter, right? So you can't just not regulate a fintech firm just because it is a fintech. You must look at the service that it offers and the activity that it offers. So if a bank and a fintech are offering the same service or the same activity and pose the same level of risk, then the same rules apply, irrespective if it's called a fintech or if it's called a bank or insurance firm, whatever you want to call it. So that's a key message that you see, that's a key thread that runs through all our responses to consultations and how we influence policymakers. Then the second part of your question was Citi's approach to innovation. It comes probably as no surprise if I tell you that it's a rather multi-pronged approach. We do a few things, Abdalla. First point is we were one of the first banks to set up innovation labs. We did that back in 2009. We set up our most recent innovation lab, actually this year, our FinTech Innovation Lab in London, which probably tells you also how we feel about Brexit. We're still confident in London. What do we do in the innovation labs? Well, we work together with our clients to come up with more innovative solutions and products, and we also run accelerators. So that's one approach. The second thing we did is we set up Citi FinTech for our consumer bank. We did that a few years ago with a startup mentality to bring more innovation to the consumer, to make them digitally connected. And we were the first bank in the world to launch an app on the Apple Watch. That's another thing we did. Then we have our venture capital business. This really scouts hundreds and hundreds of fintech firms and picks some interesting ones in which we make an equity investment in. Not so much for the financial return that we're going to get out of it, but more to see which ones are applicable to our business and what we may want to use in the future. And then we also have our accelerator that we set up in Israel, which we've had 7 classes, 70 graduates. We're now in the 3rd class, in the 8th class, apologies. The startups have been very successful. We are using them. They've raised over $300 million in capital, and 2 have been acquired already. So that's some quite good statistics and figures there.
Brilliant. And speaking of venture capital, obviously we have Tugce there wearing the VC hat in there, and with all your US-based San Francisco experience. You know better than me that when it comes to VCs, scaling is one of the most important issues out there. And you mentioned moving actually to France, setting up in France, in Paris, to host and invest in certain entities in there. When it comes to product scaling, where do you see, for example, Maltese companies, fintech companies' potential when it comes to scaling, and is the regulation that we're setting up there going to help with that process from a VC standpoint? Does it give you comfort to actually invest within such framework that we have here? And does that increase the probability of companies scaling because they're prospering within a good regulatory framework?
So I'm going to also divide the question in 2 here, because the scale-up process, I want to answer it in a more general way, because when it comes to a fintech company, when you're scaling up, I think you're dealing with the same process whether you're based in Malta or San Francisco or Paris. Of course, you're facing different markets, but again, if you want to be a big player in the fintech space, you probably should be thinking definitely outside of Malta and definitely outside of a specific region. So to answer that question, I think what she was talking about is very relevant. You were talking about mostly at the startup phase, which is very important. Of course, as banks, they have their accelerators, they have their venture capital arms. Many banks organize like hackathons, idea competitions, so that's a great way to explore collaboration opportunities between big banks and small startups. But also at the scale-up area, that's also very relevant, keeping that collaboration and implementing those startup ideas into the banks and delivering it to the market. Because the biggest issue with banks is since they're offering so many financial products, it's very hard for them to necessarily innovate or focus on one niche. And what the startup does is they focus on single product. So they innovate on a product basis, and that's why at the scale-up space, for fintech companies to scale, I think it's very important to keep working with financial institutions and banks. And the second question on the regulatory side, I'm not super familiar with the most recent financial framework, but as an investor currently, when we look at the companies in the US, we would usually push our portfolio teams to set up in Delaware. And in Europe, it's currently, again, like Malta, Liechtenstein, and Luxembourg. Those three are probably the go-to places for many of the portfolio companies of European VCs. So I would say that it's a yes, since these three companies are so popular with European VC firms.
Ian, I see that you have an interjection to make, so.
Yes, and I'm going to tie it with your previous question. It's not that I did not want to answer you, but now I have the perfect context. I think that as a country, what we're doing can dynamically affect even the investment side. And I'm going to explain a little bit. So if you look, for example, at how the internet evolved, okay, so you have FAT protocol and TIN protocol. I believe Claudine, I mean, she's better suited than covering this than me because I'm a lawyer. But you had TIN protocol and FAT protocol. So initially, nobody or minimal investment was done in the TIN protocol, which is the IP layer. And a lot of investment was done in the FAT protocol, which is applications. As a matter of fact, we had an exhaustion of applications. Now, in the DLT world, in the decentralized environment, so this is drastically changing. Why? Because a lot of the investment, a lot of the capitalization is, to a certain extent, at the IP layer. So you have the Bitcoin of this world, Ether of this world, okay? And then the application layer, dApps, to a certain extent, it runs into millions, but it has no equivalent value. So there, even investment-wise, we have a paradigm shift. However, when we then speak about decentralization, okay? So usually decentralization has three main tenets. In a blockchain, in a DLT environment, you have the political decentralization, which is there, okay? You have the architectural decentralization, which is there as well, which to a certain extent embraces as well a different, distinct, but still concatenated element, which is disintermediation. But you have the logical then element, and the logical element is the IP, correct me if I'm wrong, Abdalla, is the IP. That logical layer, the IP, is not decentralized, it's centralized. So this, for me, is a little bit as well. It is changing the dynamics even investment-wide, but it is a fallacy. But because to a certain extent, even though we're speaking about a decentralized environment, when it comes to the core valuation, because here the IP is the most valuable. If you see Bitcoin, Ether, their market capitalization runs into billions, and it is the IP. It is centralized.
Brilliant. And as I said, I promised the organizers not to go very technical on the topic, but I actually do agree with you. We have that centralization issue, especially when it comes to market cap definition. I'm going to move and shift a bit the topic and ask Claudine something that I know that you're quite interested in and passionate about, which is how do we truly include the unbanked and those without the internet. I was fascinated a couple of months ago. I was participating at an event in Mumbai, India, and India has a very fascinating experience with banking the unbanked with their Adara initiative and giving a number to every single citizen, which actually reflects into a bank account eventually, which is quite fascinating given the size and magnitude of the Indian population in general. So what's your opinion? That I know you had certain comments to make on this.
It's really interesting that you mentioned India, because it's something I would like to talk about. Deloitte was actually involved in that, working with the Indian authorities, and we have seen a total transformation of access to not the traditional banking setup, but to a method of making electronic payments and transferring funds and lending to people who previously had no access at all. So as you said, in India, the government rolled out an identification system. Every Indian citizen got a number. Those numbers were associated with accounts, not necessarily with a traditional bank, in this case it's not exactly that way, and associated with mobile applications. And that's important because we're talking about areas, rural areas, where they do not even have proper access to the internet. But in most cases, they do have access to a phone, either a very cheap smartphone or even in some cases the old style, Nokia phone we used to use years ago. So in India, they've come up with a number of applications enabling people to access funds and to use traditional bank-like services in such areas. They've also extended it, so the last point of contact, in many cases, might even not be through the phone. They've worked with small local shops, enabling the shops to act as the banker, the small local bank in the village. Now, this has really revolutionized the access to finance for society. So it started off by government making payments of social services and making different funds available to citizens through this system. And that acted as the initial carrot. If you know that there's this number and associated with this number, there's an amount of money which you can access, it's going to give you the initiative and the drive to find out how the system works. And that then led to women being empowered. That's something that's very close to my heart, because women in these rural areas are disadvantaged because of lack of access to education and lack of access to financing. And it enabled these women to lend small amounts and to set up peer-to-peer networks. In fact, if I could take a step back, I've actually left out a point. What the Indian government also did was open this up to fintech companies. So basically there's a proliferation of fintech companies in India offering services to the unbanked or the underbanked.
This is where I was getting at. They have stimulated growth within the fintech industry by providing such initiatives. And
that growth has had massive and really, really positive effect on society. So now if you are a street side vendor with a small tuk-tuk in India, you can, using this system, access fintech applications where you can borrow money and maybe go from one tuk-tuk to a second tuk-tuk which your son or your daughter drives and double your income. I think, though, it's also very interesting to note that it's not just in the poorer or the traditionally poorer countries that these applications are making an impact. When you look at Malta, we actually have similar success stories. Recently, I was truly inspired. I was so happy to see a local crowdfunding site. I'm not associated with it, so I'm not advertising something that I'm associated with. It's called ZAR. Crowdfunding for a group of immigrant women who do not have access to bank finance to set up a food truck. And I just checked this morning, they need to raise 26,000. They've already raised 22,000, and it's very clear that they're going to manage to raise the funds. So the impact of these technologies and these policy decisions are reaching every country, both poor or not so poor, and truly transforming people's lives. I think it's fantastic.
Thank you very, very much. And also, I am not associated with ZAR, but I hope that after this kind mention, maybe they will achieve their target through some of the people that are attending here.
They need another 3K people.
If I can just add to what Claudine was saying, I mean, at Citibank, we're extremely passionate about financial inclusion. We have an inclusive finance unit that tries to promote this, and last year we won an award actually at Euromoney for Best Bank for Financial Inclusion. And if I can take us to another part of the world and give you a practical example, so I know you talked about India, obviously amazing what's been done there, but also in Mexico and what we set up in Mexico. We operate through our subsidiary Citibanamex, and we teamed up in Mexico also with the local mobile phone operator, and also with actually a supermarket store that has over 15,000 branches in the country. And by partnering, we were able to allow people to set up transfer accounts very quickly using their mobile phone, or just by going to their local supermarket actually. And by the end of the year, by the end of 2017, 6.5 million Mexicans had a transfer account. 85% of the 6.5 million had no bank account or any account of any sort before. And also what I think is really important, remember, we would like to see some more developments. It comes back to identity, right? Being able to prove your identity. That can help with integration, that can help with financial inclusion, refugees, migrants, et cetera, and if that can be done on a blockchain, being able to prove your identity on a blockchain, then so much the better.
Brilliant. In fact, this digital identity management on decentralized ledger structures is actually one of the hottest topics in the DLT space at the moment, and they're quite close to that, Ian, so maybe...
More than DLT, these are all laudable, and that's the right way to go. And that is where, to a certain extent, having principle-based legislation can also help, and I'll explain why. We mentioned the unbanked or the underbanked. And to a certain extent, we tied it with digital literacy. But, and this is not only third world countries, if you look at UK, 12% of the UK population is unbanked. Now, most of them are unbanked. It's not because they don't have digital literacy, but because either they have had a bad experience with banking institutions, or else it's because they don't trust it at all. So to a certain extent, we need to bridge the divide even there. Their fintech can be very useful. So RegTech will be important, and putting as well sundown clauses in the legislation so that it can ease from the burden of banks, existing financial institutions, because that is a cost. So it will ease down as well on the user. That's very important, and that is where we marry innovation, because through technology we improve the situation.
Thank you, Ian. Okay, so we've been asked to include the audience. It wasn't my plan, but I didn't know it was before the end of the countdown. Sorry about that. So please, in the audience, if there is anyone that has a question to our fellow panelists in here, please ask for a mic so we just can hear your question.
I liked one of the point which you referred about the India's Aadhaar scheme, but there are a couple of things which is connected the fintech, which I think most of the world is missing, is about the seamless interaction and the seamless transaction, both interaction and transaction between the bank end and the mobile end. And that is how the technology is, creeping in and making it much more wonderful, much more acceptable. And one of the scheme was about the banking schemes, about every Indian has to have a bank account which is connected with a smartphone, and then it is connected with the remote banking system. And that is how I think the fintech growth in India is remarkable, and almost every single day a new company is being registered and which is being raising money. And at some point they're raising not 20,000 or 50,000. Some of them have raised over 600 million also in possibly 2 rounds in a month. Coming back to the point about the question, is that such rapid growth about the fintech, where do you foresee it's going to impact the global financial industry? To all of you. Thank you.
Who would like to address that from the panelists? The growth in the fintech industry, how is it going to impact the whole financial industry?
Yeah, it's a really good question, and I think it's sort of what we just discussed. Hopefully, it will help create a more inclusive financial ecosystem, and it will get that 2 million, 2 million people that are excluded from the financial system, it will bring that number down. But in order to do that, I think the key ingredient, and I think that's a common thread that's been running through the remarks everybody made today, is collaboration. We're not going to do it alone. Citi isn't going to do it alone. You're not going to do it alone. Deloitte's not going to do it alone. It's a collaboration and partnership and continued education with everybody in the ecosystem. Policymakers, regulators, central banks, the super heavily regulated like ourselves, investors, the startups. All of us are in it together to really make a difference.
One last thing, because we have 40 seconds left. So I would like a one-word answer. When it comes to fintech, and given the latest trends and latest innovation that's happening, which side of financial services do you see it impacting the most? You mentioned crowdfunding, there is trading, there is lending, there's different elements. So if you can give us your perspective with just one word of what you think, or you can say all of them.
I would say the settlements, if the required intervention is done, particularly on the Basel Accord, when there's a distinction between when you have an intermediary and not. Even from that angle, we would need to intervene. Otherwise, then with blockchain, DLT, it would be, I think it would be a regenerative effect on that particular industry.
I would like to focus on inclusion. I believe that fintech is enabling behaviors in society that are similar to what we take for granted in our day-to-day lives, people helping each other. So things like peer-to-peer, crowdfunding, it's bringing the normal behavior of people helping each other to technology and empowering people to help each other.
Thank you, Claudine.
Okay, so you already know how I feel about inclusion, so I'm not going to repeat myself. So I'll pick on another topic to answer your question, and that's RegTech, so regulatory technology. If we can use it to make compliance and complying with rules and regulations invisible and painless, I think that would be amazing. But not just for us. I think it can be used for regulators and supervisors as well to make better judgments and to supervise us better.
Thank you, Sophia.
So you said one word answer, I'm going to say blockchain, of course. Just removing intermediaries, just disrupting the whole financial ecosystem. I think in the next 10 years, we're going to see the whole financial world being disrupted by blockchain and removing the typical banks and insurance companies out there if they can't keep up with the game.
Brilliant. Thank you so much. A round of applause to our fellow panelists. Thank you all very much. You've been great. Thank you.